Hey everyone, welcome back. So you owe New York State money and you can't pay it all at once. That's okay, you're not alone. And you've got options. Today we're talking about installment agreements, how they work, how to get one, and what to watch out for. An installment agreement is exactly what it sounds like, a payment plan with the state. Instead of paying your full balance up front, you make monthly payments over time until it's paid off. New York State offers these because frankly, they'd rather get paid slowly than not get paid at all. And for you, it's a way to resolve your debt without draining your bank account or dealing with aggressive collection actions such as, levies. So here's what you need to know about qualifying. First, you need to be current on your filings. If you have unfiled returns, the state isn't going to negotiate a payment plan with you. So we got to get those filed first. Second, the state will look at your balance. For smaller balances, generally under $20,000, you can often set up a payment plan online without much hassle. For larger balances, they're going to want more information about your finances. That's where a financial analysis comes into play. Third, they'll want a payment amount that makes sense. The state typically wants the debt paid off within a certain time frame, typically the statute of limitations. So your monthly payment needs to be paid high enough to get there. For balances under $20,000, you can often set this up yourself through the state's online service portal. It's relatively straightforward. Most people that come to me, I just send them there and they're able to do it with relatively little hassle. For larger balances, or if your situation is more complicated, you'll likely need to submit a financial disclosure, basically showing the state your income, expenses, and assets so they can determine what you can afford. Once the agreement is in place, you make your payments on time, every month. Miss a payment and the agreement defaults and you're back to square one with collections. A few things to keep in mind. Interest and penalties keep accruing while you're on a payment plan. You're not freezing the balance, you're just paying it down over time while it continues to grow. So the faster you can pay it off, the better. I always tell clients if you get a windfall of money or have any extra, go ahead and pay towards it if you can. Also, if your financial situation changes, for instance you get a raise, you come into some money, the state may expect you to pay more or pay it off faster. And finally, an installment agreement doesn't automatically remove a tax warrant if one's been filed. You may need to separately request a release or subordination. So if you owe New York State and you need a payment plan, this is very doable, but you want to make sure you're setting it up correctly and the terms actually work for your budget. If you need help negotiating the best possible arrangement, give my office a call. We do this all the time, every day, for both state and IRS matters. As always, talk to a tax professional who can look at your financial picture and make sure the payment plan you're agreeing to is one that you can actually stick with. Thanks for watching. See you on the next one.